Good morning, guys. Welcome to this welcome to this Monday, April 20th, and we had literally just one day of ceasefire, or not ceasefire, but the open Strait of Hormuz, and then the whole thing shut down again. So that's how long that lasted. So Friday was one of those day everything gapped down. It was a great day. Markets rocketed to the upside. It's all about that strait being open, and the Iranians said it was open. Everything was great, and I guess they weren't quite on the same page there, so everything kind of fell apart on Saturday, and now they are back posturing again. They're supposed to be doing something this evening, but we'll see what comes out there. But oil, as you can expect, gapped up at the open. And they've been holding around 87, 88. Not as much as I thought they would gap up, but it's so market is not quite totally bent out of shape, but it is definitely something to watch this back and forth. So nice day, extension day you had on Friday to the upside. We backed off a little bit on the markets. Oil gapped up. All about this stuff is going on there in the Middle East. But it's anyone's guess right now what's going to happen with it. So they say that it's supposed to be something signed this evening, but even if something is signed, I mean, I don't know. So I'm gonna go back and keep posturing after that. We'll see how that whole thing shapes up. But that's what all the overnight reactions was all about. I'm just massively surprised that the market is gap down and be slowly grinding itself back. So market is just looking past this, getting ready for earnings season and good earnings, and the market just keep going forward. So I think this freight train is kind of left the station, and we are in pretty good shape to take this higher. And it could be. I would watch as they open for a potential initial reaction to the downside, and that would be the one I would be watching for if we start seeing this market open up and then start seeing some significant selling. That would be probably a reaction on the weekend stuff. But if that doesn't happen and doesn't materialize fairly quickly, I would think that we have a shot of just holding the ground and potentially trading higher. So given what happened, we're starting off range-bound biases to the upside. That's the big caveat that if we start seeing some selling as today's session kicks in, and we start seeing like, okay, the market is reacting negatively to what happened over the weekend, then or maybe headline coming out too, who knows? Then just to stay, then you'll probably see them take out these lows here at the 70.85 and the 70.75. And at that point, I would probably shift my bias towards the downside. But initially, I'm looking to buy weakness, looking to get long against that 71.15s, 7100s, 70.85, 70.76. So these three support areas. And if they start trading below that 75s, I'm definitely back on the taking off the long bias and probably going straight back to the short side. So I mean, given the pretty strong move we had the last few days to the upside, and them running out of gas and reversing and selling off, and then if that happens, that would probably be a pretty violent one. So, but I mean, I'm thinking the market, it's the overnight and the trading up like this. Oil hasn't gapped up more than from 82 to 87. So this is oil. I guess dragging down my F2 for oil. So you can see here, oil closed down here at the so here it's the overnight on oil. Let me see gap down. I can split this guy out like that. All right, so here's your oil. So they closed around about 84 on Friday. They were trading all around in the low 80s, and they gapped up to 88. So 84 to 88, so $4 or $5 to the upside, and they haven't gone higher from there. So I would watch oil very carefully and see if that guy is moving. If it starts moving higher, then you know something is up. If not, then you're probably going to see maybe even a signed agreement. We'll see. But it's a process there, I guess. I mean, you watch that thing, you just shake your head. It's just nothing is ever done when it's done, and nothing is ever negotiated when it's negotiated. I mean, I hate to be one of those negotiators trying to get a deal done, but anyway, so looking to buy against that 71.15s, 7100s, 70.85, 70.75. These four support areas. On the way up, not going to be very aggressive on it, but given the caveat that we may have some issues going on here at the open, it could be not just at the open, it could be all the way up to that London close. I would expect it could get some selling kicking in. But I would look for short setups against that 71.35, 50, 71.65s, 71.80s. And I would look to these first three support areas. If they start taking out the 71.60s, I think the market is really looking past it and we're heading higher, keeping this trajectory to the upside. If they start stalling here in the 71.35s against the 71.50s, against the 71.65 here, if they stall in one of those three resistance areas, chances are we're just going to go sideways for a bit, maybe even see the high and then see some selling. So starting off on the long side, see if they can start taking this higher, watching these lower support areas for potential selling if the market's going to have a bad reaction to what happened over the weekend. Sometimes market could really start off with a big fake out to the upside, can start taking us higher and then complete reverse on us. It can start a bit early weakness and reverse and start heading higher for a bit. It could go either of those ways. So we are just going to stay in this range with a bias to the upside. So favor the long side to get started. And then we'll watch these lower areas. And then see if they start taking out these support areas at the 85 and 75. That's when I really shift the bias. Other than that, we can see a variation, a bunch of different variation on how this whole day is going to develop. But given that we have all this uncertainty, that's kind of causing that potential concern. But it's not much you can do about it than to trade what you see and see. And what we're looking for, we have two big drivers here. We have the momentum we had from last week to the upside, which could continue. We have the potential hullabaloo here over the weekend and a potential negative reaction to it. And if that the reaction doesn't come, at least throughout the day session, up to the London close, I will be more comfortable staying range bound and expecting some sort of continuation. We also have earnings. Earnings season is in full swing, so we're going to get earnings after the close. I don't know which companies are reporting, but you can expect reactions after the close as the different company report earnings. And so far, the earnings has been good to the upside, and that's kind of been fueling this rally. On the NASDAQ, same story there. A nice move to the upside. I think the levels I'm paying attention to there is going to be that 26,450 and the 500. These two support areas. If both of them comes out, same story there. Looking for potential retracement after that. So initially on the NASDAQ, looking to buy against that 26,620s, 550s, so 26. This is 600, 620s. This is 540 to 50s. Then you have the 500 and the 450s. So looking to buy against those, same dynamic as on the ES, looking for early weakness on the way up, looking for potential short all the way up here to the mode of Friday, 26,820s. So looking for short against the 720s, 760s, 720s, 760s, and then 820s for rotations down. Now, if they take out the mode here on Friday and start heading higher, Yale market is shaking off what's going on, and we potentially have continuation from Friday. If we see the market hold there, or we get a headline or something to start heading lower, I would just watch these lower support areas. So it's you can see probably a pretty volatile day. With the market swinging back and forth, trying to figure out what's going on. So you can have some headlines come out and some negative reactions. You can have some other positive reactions. It's just hard to predict, especially when you have stuff like that going on in the world, because you can't really control it. If a headline comes out or something happens, the market react. You just had to be head on the swivel on the days like this. Probably after this week, we'll know pretty much where the whole thing stands. So if they're going to be playing games and you're going to be, it's not going to be a deal. They're trying to play their games again. It's going to probably be a pretty severe reaction, and then they'll be back in the Stone Age, or they're going to be some sort of a deal, and then we'll just have to sit and wait for see if that's going to hold, or if it's going to be more of this back and forth crap going on. We'll find out. But anyway, so same story there. Looking to buy weakness on the Nasdaq against the 620s, the 550s, 500s, 450s for rotations up. Looking for shorts against that 720s, 750 to 60s, 820s here for rotations back down again. And let's see if we get some continuation. It's going to be very interesting to watch. So that's where we are. Those are the things I'm considering this morning. And as we know, it's anyone's guess what's going to happen in that. I think it's going to happen. Usually, you don't hear them talk in positive terms if they don't think have an expectation that something decent is going to happen. But there's so many different things out there which can go sideways on us. So, and as I said, the two big things on the indices are really if you're going to be getting a negative reaction, we may see that early on here before the London close, some steady selling. And if that doesn't happen, we're probably going to stay range bound, probably stay with the bias to the upside. That would be a good one. And on the bond market, kind of holding in the range, pretty tight range on that one. So same story there, just range bound trading. Look to sell strength against that 1420s and the 1430 to 115s. We're going to buy weakness against 1406s, 14s, the buck. So 11406, the buck, 1328s, 1326, 24s for rotations back up. So yes, the range bound trading on the bonds. Usually the bonds is the F2 hasn't been incredibly useful, but you can get some perspective. But the range is so narrow so that you have. I mean, if getting a short against that 1419 mode would be an interesting one. Maybe that high volume area at the 23 if they get there, but I didn't mark that up. It's gets a little bit too crowded. It's getting crowded on the way down here, but. And then looking to buy against weakness, London low, session low. So those are the two ones I'm paying attention to. But we'll see if we get some reactions on the bonds today or not. But given the Friday trading, I mean, I thought we had a shot at getting up to the 115s, but that attractor area. But we'll see if that's going to materialize or not. And on the big picture here, you have trading right in this little range. Here's your attractor right here for the 115.10s. But I haven't really done much. The range is, as you can see, pretty tight, pretty range bound, and we're really just swinging back and forth in a half point range every day. So range bound trading on the bonds. We'll see if anything develops on that one. I've been very patient. I mean, I took a couple of trades a while back. Haven't seen any really good opportunities on the bonds lately, but I'm looking for stuff like this. All right, so this thing you're seeing here, right here, the one at 1415. You get 3 or 4 bars like that. That's kind of the time you want to try a trade. 2, maybe 3 bars are forming like that. You know it's stalling, but you kind of had to wait for the day session to kick in. Right now in the overnight, you get all over the place, but it doesn't mean that you have a good setup. So in the day session, yeah, so as the opens pretty much now, we'll see this whole thing starts. If you start seeing that there, then we have a potential trade. But anyway, so range bound trading on the bonds. On the cryptos, the crypto they rolled. I rolled the figuring out the rolls of it. Here's oil on the bottom left, and in the May oil contract there. I was on April on Friday. I do roll right now the contract at the end of the period. So since I don't have any good rollover rules on crypto oil or Coinbase oil, I should say. So I just manually roll it, and then you can do that by just forcing a symbol replace, and then you take off your backfill. So if you haven't done that before, you just uncheck that use continuous on this chart right there, and then you go, but you force the roll before it really rolls. Then you get at least a readable chart. But it's interesting. So I mean, as I get better rules for it, I'll probably try to build those into the data server as I did on the other one. But here's silver on the top left. They moved pretty good to the upside, back down. We'll see how that's going to move. The Bitcoin and Ethereum is swinging back and forth, but not much. I took one trade on that in the overnight. That didn't do much. It didn't go anywhere, so I got out of it. But anyway, so keep watching that thing. That's a full swing. If you want to trade cryptos, let me know. Futures on cryptos. It's not crypto. This is not the spot contract. This is futures contracts on cryptos is what this is. Alrighty, guys, back to the ES and the NASDAQ, and we kind of left it. We haven't seen market is kind of just in a holding pattern right now. We'll see how it kicks in here in about in an hour or so, and the markets really kick in. Can't touch much on news. We have earnings this whole season, or this whole week. To not much news to drive the market today. Retail sales tomorrow, pending home sales. We got some, or nothing much on Wednesday. Thursday's pretty light. It's a pretty light news week, so I mean, I'm going to just rely on the earnings reports. Probably going to be driving it. Earnings reports and the Iranian situations most likely going to be driving this market. Alrighty, guys, we'll wrap it there, and I'll see you back 11:30 for the next update and see what happens. Alrighty, guys, later.